JJ the CPA here. Hope you're doing well. Hey, want to give you a quick update. We know that the PPP Flexibility Act was signed into law, which is great news. I want to run through a few things related to it, the EIDL. There's a little bit of a tax savings tucked into this Flexibility Act that everybody's kind of overlooked a little bit, and then run you through kind of what I think is a complete misconception of what is in the Flexibility Act, and it's just not. So the first thing to note, obviously, if you've been paying attention, which I know you have, the 24 weeks is now the covered period out of the Flexibility Act. What does that mean? You have 24 weeks to incur the costs to achieve forgiveness. So it's 24 weeks of payroll and the related payroll costs, as well as the rent, the utilities, and the interest. One of the things to note, and we'll have to wait until the final SBA guidelines and updated application come out, but many are speculating, myself included, that the owner's pay and the self-employed will still be based on 8 weeks, but for the payroll on employees, it would be up to 24 weeks, as well as the other things. And we know that the big news is that now there's only a 60% requirement of the use to be done on payroll, 40% up to 40% on the other expenses, which is rent, utilities, as well as the interest. On the self-employed, as I was alluding to, what we're looking at here is I've done a number of videos, I've got links in there, but I really hope that it will be based on the 24 weeks. Here's why it may not be the case, is that the loan, the PPP loan, was based on 2 months of payroll. You take line 31 of Schedule C, divided by 12 times 2.5 led to the PPP loan amount. And I think that that could be the same. There's a distinct line item on the forgiveness app for payroll costs for the self-employed, independent contractor, sole proprietor, single member LLC, as well as those that are getting wages from the entity that they own, called employee owner wages. So that may be stuck at 8 weeks, but nonetheless, it does seem extremely likely, we'll need to see the final updated application, that those payroll costs of any kind, employee or owner or self-employed, sole proprietor, etc., would be divisible by 60%. And yes, divisible. Go to the application, page 3, you'll see on line 10, it's divisible by 0.60, and I'll show you here in a second why it's not an all or nothing. I've got a little whiteboard I'm going to go over very, very quickly. The other thing, here's the hidden thing that came out of the CARES Act, but then got really updated beautifully in the Flexibility Act, which is this: the employer and the self-employed, okay, those that file Schedule C can take advantage of this, but the employer and the self-employed individual, they pay, in essence, an employer portion of Social Security taxes. That can be deferred until 2021, 2022. Half is paid in each of those latter years, respectively. So what does that mean for the self-employed? When you're making estimated tax payments, when you're paying tax, okay, you have a Schedule C. If it has net income, take that line 31. This has nothing to do with PPP. This has to do with Social Security taxes that the self-employed has to pay. So take that line 31 times 0.153%, or 0.153, that is your Social Security and Medicare tax employee and employer portion. Okay, I won't be able to go into the details of that. You'll either have to trust me or check out some other videos related to that. Here's all that you need to know as a self-employed individual, and as an employer, that 0.62 or the 6.2%. These are the same things, right? 6.2% is 0.62. 0.062, sorry. So point is that that can be deferred until next year. So for the self-employed, when you're making estimated tax payments for 2020, and you're including in that your self-employment tax, 0.062, okay, does get deferred until the next year. Same thing for the employer. It used to be in the CARES Act, you could do that, but only if you weren't getting PPP. Then Congress came and said, know what, we're gonna let you go ahead and defer that, but only to the time of forgiveness is determined. And then the Flexibility Act said, you know what, for all of 2020, whatever the employer portion is, that additional Social Security tax, you'll be able to defer it. So for employers that have 100,000 in payroll, you're paying as a match 6.2%, 0.062 on that. So this would save you $6,200 for the current year. You're kicking the can down the road because you would need to pay $3,100 of it in 2021 and then $3,100 of it in 2022. For the self-employed, it works the same exact way. So if you had net income on your Schedule C, you would be paying 15.3% in self-employment tax. Included in that is 6.2 of Social Security tax, in essence, deductible amount, the employer portion as an equality comparison. But from that perspective, you will be able to not pay that now and defer it in the exact same math as what I indicated there. I'll be doing a special video on that with a whiteboard related to that. What was not in the Flexibility Act, so what we should not count on, okay, is that we will be able to deduct the expenses that the PPP funds paid for. I've thought this from the beginning, but here's what it is. If you get PPP funds, it's free money to the extent that it's forgiven. It's considered a grant, and from the beginning of time, any business that gets a grant, it's not taxable to them, okay? But any expenses it pays for is not deductible. Makes sense, right? You got free money, so what you use that free money with, you're not gonna be able to deduct. How am I accounting for that at year end? Basically, what are the expenses for the year related to that? And then it's a reduction of those expenses. Maybe you can look at it as kind of 6 1/2, but take note, it only is to the extent of the loan forgiveness that it is an expense reduction. A couple other things that I feel like wasn't fully clarified. We knew from the beginning that if you got an EIDL advance up to $10,000 between January 31st and April 3rd, that would reduce down your loan forgiveness on PPP. It seems as though from the PPP loan forgiveness application, regardless of when you got the EIDL, you are going to have to reduce down your loan forgiveness on that. Now, it's not a part of the calculation, but on the application, it's asking for your EIDL information and amount, which is leading everybody to believe that no matter when you got the EIDL advance, regardless if you didn't use it for the same purposes, it is going to reduce down the loan forgiveness. Now, we have to get the updated SBA application for PPP forgiveness before any final determinations are made, as well as the updated SBA guidelines. But what I will tell you this is that there is not a cliff, okay? As much as you may think there is or heard that you have, if you read recent articles, no one is talking about the cliff anymore because everybody is realizing after Trump signed into law what I've been saying from the beginning. And that is this, on the PPP Flexibility Act, what it did change is that you have 60% to use for payroll. So focusing on line 10, page 3 of the forgiveness application, it's divisible by 0.75 on the old application. It's going to be updated to say 0.6. Why divisible? Because what it's divisible by is the payroll cost, okay? It's taking the payroll cost, not the loan, okay? It's taking line 1, which is the payroll cost on the forgiveness application, and before it divided it by 0.75, because it's taking the payroll cost, inversing it up to an amount that in essence shows that, okay, here's the maximum amount of loan forgiveness, because that maximum amount times 75% is getting you to the math. I get it, but if you're confused by it, go to jj2cpahelp.com. You have to look at the application, run the math real quick. It'll make sense to you, but it will now say 0.6. It'll be divisible by 60% because line 1 is not the loan amount. Line 1 is only the payroll cost. So if you take payroll cost divided by 0.60, it's going to give you a dollar amount that then that dollar amount times 60%, okay, is going to be meeting the minimum payroll cost. This is not an all or nothing, period, the end. I've got a number of videos that I just put out because the language, in closing, the language is exactly the same in the Flexibility Act as it was by the SBA guidelines that came out April 3rd. In the video, I put up both language. In the video, I show and compare side by side, okay, that it says shall. It says shall be used for 75% to achieve loan forgiveness in the SBA guidelines, okay? It was never in the law. It was never in the CARES Act. The Flexibility Act now puts it into law, but in the exact same language as what the SBA came. So it can't just all of a sudden be a cliff because the SBA guidelines said the exact same language. It has the same calculation where you're doing an inverse amount. So think of it this way. The maximum amount of loan forgiveness is 60% on payroll. So when you do that calculation, right? So if you only spent X amount of dollars on payroll, you're going to divide it by 0.6 and it's going to give you a higher amount times 60% to then determine, did you achieve full forgiveness? You're going to have to look at the application because obviously it's complicated, but if you respectfully disagree, I'm only going to allow you to disagree, okay? If you actually go to this, you run the math, you read the instructions, you read the page. You can't just go based on, well, I read this article or I heard, or it doesn't make sense because it says shall use to achieve forgiveness. It's this, guaranteed. All right, hey, the last thing I want you to note is that there's been no indication yet, but we're coming upon the July 15th deadline. The one thing to note is that second quarter estimated tax payments are due typically June 15th, but they're not. They're due July 15th. So April 15th deadline and June 15th deadline, and in fact, anything between April 15th and July 15th just simply has a due date of July 15th without having to file anything. So for those that pay second quarter estimates for 2020, they're not due June 15th. There's nothing to mail in. They're just simply not due until July 15th. So July 15th, 2019 tax returns for individuals are due. Any tax for 2019 not paid yet is due by July 15th. And first and second quarter 2020 estimated tax payments are due July 15th. However, White House is considering and is open to the tax deadline being moved to September 15th, maybe even December 15th, either September or December 15th. Hasn't happened yet, but instead of there being an April 15th, we now know it's July 15th. That July 15th may come out to be later than that, and I think it would be great for everybody since we've been in lockdown much longer than that. All right, hey, here's your update. I really appreciate it. I'd love it if you subscribe, and then don't you ever forget, you've never met a CPA quite like me. All right, hey, have a great day. Thanks for tuning in and hit subscribe.